What is a balance sheet? Ooh, I love this topic. What is a balance sheet? I love this topic because many entrepreneurs and business owners are not as familiar with their balance sheet as they would be with their income statement, also known as a profit and loss statement, because it's a little esoteric. It's not, when you look at a balance sheet, it's not obvious what it's telling you. So in the next couple of minutes, I'm hoping to give you some basic parameters, some basic direction on how you can look at your balance sheet. Now, if you've got a copy of your balance sheet, it's going to make this much, much easier because you can actually look at it and I can walk you through it and you can kind of go, oh, okay, I see what he's talking about. But if you don't have it, that's okay too. I think you'll kind of get the idea. I'm going to create some context or lay a foundation by comparing your balance sheet for your business to the personal net worth statement that you may have for yourself. And a personal net worth statement says, here's the stuff I own, here's the stuff I owe, and here's what's left, also known as my net worth. When you look at the balance sheet for your business, it lays out the same way. What does my business own? What does my business owe? And what's left over? What's left over is typically called retained earnings. So anytime you want to know how successful a business is, maybe you want to know how successful your business has been, the easiest place to figure that out is to look at the balance sheet. If you look at the balance sheet and you can see that there is a lot of retained earnings underneath liabilities, which you'll find at the bottom of your statement, then that's going to tell you that the business you're looking at has been profitable for since the beginning of time, because the retained earnings are an accumulation of the net profit of the business over time. So if you're looking at a balance sheet and you say, here are the assets and here are the liabilities and here is what the business is worth, the retained earnings, that if you compare it to your personal net worth statement, that should help you take a look at it, and understand it. The reason why a balance sheet is so important, in my opinion, I think it's arguably more important than the income statement, is because the balance sheet really tells you what you're building. It helps you identify quickly where the strengths in the businesses are, where the weaknesses are, and ultimately how healthy has the business been since the beginning of time. So some quick tests that you can look at. On your balance sheet, you'll have something called current assets, and then you should move your finger down and find current liabilities. Those two line items right there basically tell you, can my business survive? Is it going to survive? The most obvious one that I see all the time is accounts payable are greater than accounts receivable. So if you look at your accounts payable line, you'll see this is how much money I owe all the people that I do business with. And the accounts receivable line will tell you this is all the money our business is owed from its customers. And the basic math is your accounts receivable should always be greater than your accounts payable. When you're looking at the rest of your balance sheet, what you're going to want to be looking for is to say, as I go down and I look at my assets, do I understand what my business owns? I've got my bank accounts, maybe I've got some inventory, maybe I've got some equipment, maybe I've got some loans or some money that is owed to us from other companies that I own or that I'm a part of. So you look at the asset side and then you look at the liability side and you start walking down the liabilities and you say, do I understand everybody that our business owes money to? And so it's not just your payables. You're going to have your payables there. You're going to have your credit cards. You're going to have your government remittances like tax and payroll. And then you're going to have something called long-term liabilities, which would be loans to either shareholders or other people. You might have other obligations on your balance sheet, but it's important when you look at the assets and you look at the liabilities, you can walk yourself down the list and you can say to yourself, I know what all of this stuff is and it makes sense to me. But if you think of it in the context of what does my business own, what does my business owe, that helps you understand what you're looking at, I think, a little bit easier. And then obviously the last thing you're looking for is retained earnings. Now, again, in my experience over the last 2 decades, when I talk to an entrepreneur or business owner about their balance sheet, a lot of times the balance sheet has stuff on it that they just don't understand. I know in one company that I was spent some time with, they had all these intercompany loans. They had some holding companies and a management company and a couple operating companies and all these loans going back and forth. And no one on their finance team could really explain to them the movement of who owed what, how much, and all this complicated business structure. Like, where's all the money and who owes what? So it's important when you're looking at your balance sheet to have your finance team with you and to force them to help you to understand what it is that you're looking for. So if you look at your assets and you don't really understand what's sitting there, ask questions and figure it out, because it's really important as an entrepreneur or as a business owner to know what it is your business owns. And then more importantly, go down the liability side and say, well, I don't, how much does my business owe? How do we owe that much? Why does that make sense? And what you're going to find is that the balance sheet has a lot of stuff on it that doesn't jump out as being completely obvious. But as you start to kind of pick away at it, what you're going to find is it's not really as sophisticated or as complicated as it looks if you know how to ask questions. And so your finance team should be there to help you. So a balance sheet, what does our business own? What does our business owe? And what's left over is referred to as retained earnings. And as your business generates income, and you can see that on your income statement, which is in the next episode. But as your business generates cash or net revenue or net profit, so your income less your expenses equals profit, your balance sheet basically says, here's what you did with your profit. Here's how money moved through your business down to retained earnings. Here's what you did with all your retained earnings. So hopefully that shines a little bit of light on what I think is the most important document in your financial statements, and it's your balance sheet, because it's the document that tells you what is our business actually worth. Are we building any value here, or are we just getting bloated with liabilities that don't line up with assets, that there's some leakage in kind of how our cash moves through the business? But take some time, pull out your balance sheet and just try to understand it. And if you need help, go to your finance team and get them to walk you through it, because it's important that you understand what does the business own, what does the business owe, and how well have we done since we started our business in terms of what are our retained earnings or shareholder equity. So hopefully you found that helpful. On the next episode, make sure to pay attention, because we're going to be talking about a financial statement that everyone has an easier time understanding, and that is an income statement.